Hi there, I'm Blaine Birch with Dryrun.com, and this video is just going to help you get started with the software and show you all the different sort of functions and features that Dryrun offers to get you going. So I'm going to make a little budget up to show you from start to finish how we would do that. Dryrun, a lot of times isn't actually used for modeling out your entire business and all of your finances. Often it's used to tackle one business problem, something like how can you improve your productivity? Or in the case of a service business, if your invoices that you've sent out, if they start coming in late, if the cash starts coming in late, how is that going to affect your business? It's just a really good way to take one business problem and model it out and figure out how you proceed. So I'm going to start a new plan. So this is a brand new plan. The first thing I'll do is I'm just going to rename my plan to Design Shop Inc. And so this first scenario, it's just called New Scenario, but I think I'm going to call this our most likely scenario. So this is what I think is going to most likely happen in our business. Now, month start, let's say we're just starting this business and we've just got a bank loan and it's for $50,000. And this is going to help us figure out how soon and how much do we have to get paid to stay in business. So what we'll do here is we're going to start adding expenses, our monthly expenses. So it might be things like rent for your office. And you can see that right now this is in the general expense category. It repeats monthly, and we have it starting November 1st. And now you can see what happens to our graph. We're starting to burn through some cash. Now we can add as many items as we want. So let's say I want to add some salaries. And let's say all of our salaries in our business are $5,000, but they're paid bi-weekly. So Dryrun will actually calculate what that amount is per month. So now you can see, oh, we're going downhill really quickly. But that's really common in a service business, that salaries are a really large part of your expenses. And you can add as many expenses as you want in here. You can also put them into different categories. So let's say we had utilities, maybe it's $300 a month. We could add another category and call it really whatever we want. Let's say in this case we call it IT. Let's say we have our web host, and maybe that's $40 per month. But I'm just going to change that to our IT category. And you can see now that we can just start to build up our expenses all the way through here. And you can see here we have general income. This is just the starting point for Dryrun. You can always delete that, or you can add something in here. Let's say for general income, let's say we subleased part of our office and we made $500 a month off of that. So now we actually have $500 in revenue, and we can see how this by the time we hit February, we're just above the line, 4 months in, and now we're into the red. So we can build that out as much as we want. Payables, this is where we put those one-time things that really can affect our cash flow. So let's say we bought a computer, and and instead of monthly, we're not buying a computer every month, we're only going to buy something one time. So payables are the default, when you add a new item in payables, the default repeat is one time, because generally that's what we're looking at. If, let's say, we wanted to pay a contractor for doing some work on the office, and his bill was $2,500. So in January we paid one bill of $2,500. So you can see kind of what happens here. Now, because our design shop tends to get paid with invoices, we know we started in November, and let's say we started working on some jobs right away in November. But we weren't done till, let's say, a few weeks into November. We bill them and we're not going to get paid for 30 days. We really have to put in our receivables when we believe we're going to get paid. I'm just going to delete this default item. We're just going to start adding some items. So let's say my invoice number one for $5,500, we believe that if we invoice it on the 18th of November, we're going to get paid on the 18th of December. So we know this money should come in December. And we also have invoice number two for $3,000, and we expect that one around the 13th of January. Invoice number three, and we also expect this one in January, although it's going to probably be late January, and this one was for $2,300. Now you can see how our cash flow is affected by that. But you can also see where you're at the end of each month. So your total for each month and then your month end. So the total for the month is what's happened in recurring payables and receivables. Well, we've basically been in the hole every month, and our $50,000 starting to go down and down and down. I can just swap and see what's happening instead of our month end, what's happening in a typical month. So we're starting to get paid for some invoices, but still not quite enough. So you can start to see, okay, how much money you're going to have to make each month, how much money will you have to bill out. Of course, we're going to have to bill an awful lot more out to get into the black. But just to move on here and show you how this works, I'm just going to duplicate the scenario. So if I roll over our most likely scenario, you can see where we can rename it, we can reorder them, move them up and down, even delete the scenario. But I'm going to duplicate the scenario. And I'm going to call this land big job. So what happens if we land that big job that we've been trying to get? Now we can start working on it maybe in December. We probably won't get starting to get paid until February, but big job number one. But this is a big one. We're going to get paid $25,000 in February, and we're just going to move forward here. We're going to move forward because we think the next one is going to come in April. So we get paid in February and April. Big job number two. So we think we're going to have another $25,000 in April. Now you can see how our cash flow is really the same coming down here, but when we start getting this big job and we get into the black right away. So that can really tell us a lot about how our cash flow is going to work. Now if I duplicate this land the big job, and now what if our big job is delayed? And so we start getting paid later and later. So instead of February, let's say we got paid in March. And this one we expect in April doesn't show up until May. Now you can see that we actually, well, we start coming down, we get an awful lot closer to getting into the red, but then our cash flow starts to move up. But we just kind of float just above the break-even point. And I can just actually take away these other scenarios if you want, just to see how this looks. We stay in the black versus our most likely scenario where we're just going down, down, and down. Now there's one other thing I'd like to show you to help you get started, and that is, let's just say if we land a big job, it's these little plus minus signs beside our main line items. So beside recurring payables, receivables, and even our total, we call these quick adjusts. So what that means, if we, let's say we want to go to our most likely scenario and we want to say, okay, how much money do we have to land, to try and keep us in the black here? So let's say we thought, well, we think we can sell $7,000 worth of business and get paid. What if we could get our receivables up by 30%? So we can actually do this by percentage too, and we can see how this starts to affect our orange line. I'm going to hide these other lines so we can just take more of a look at this scenario here. And we know, oh, if we do this, we're going to be heading into the red really by April. So we know we need some receivables in April. Um, well, what if we can sell and actually invoice out and receive some more cash by April? Well, it doesn't really affect us much because we're so far into the red. So we're going to have to start getting some more sales and getting paid a little bit sooner. But these little quick adjusts are really handy because you can say, what if in February we need to buy some more equipment? And instead of having to add a line item, we can just quickly model it out and see what it looks like. You can also just add a brand new scenario. So let's say you just wanted to start fresh with something and just compare, let's say your receivables. And you can see that this line actually shows up right here. So instead of duplicating and tweaking numbers, you're just starting with a fresh scenario. And so this is a plan in Dryrun. You can see that we have several scenarios, with 4 actually. And if we go back to our plans page, you can see that you can have as many plans as you want. You can archive plans, and you can even share plans. So this one we just built today, and we can even share the plan via email as well. So hopefully that gives you a little bit of an idea of how you can get started with Dryrun. And watch dryrun.com for lots of updates. We're going to put up videos explaining different business problems based on things like managing your receivables and how to maybe improve your cash flow by managing your invoicing strategies. Also things like how to improve productivity and how to see how productive your staff are being, let's say. We're going to have all sorts of little scenarios up there that are going to help you figure out different ways to model specific business problems and try and tackle those things. So again, it's Blaine with dryrun.com. Thanks for watching.